My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Another great episode. Today, zooming in from beautiful Santa Clarita, California. We have a multifamily real estate investor, a syndicator, a fund manager, and that's a lot for a young guy, but you're doing lots of stuff in real estate. This is Mr. Anthony Pimentel. Anthony, welcome to the show. Great to have you.
Hey, thank you. Hey, thanks for having me. Appreciate it.
Well, I'm glad to have you on board. So actually, I was thinking, Anthony, I think we might have got connected through Tim Mai at some point. That seems to ring a bell. But anyhow, let's just zoom out, give everybody a big 30,000 foot perspective of what does real estate investing look like for you. We're early into 2025. What do you guys do? What does the portfolio look like? What asset classes are you focused on? Just give us a snapshot of where you're at.
Yeah, so, when I started out, basically, I started in the residential and grew my portfolio to a few hundred doors. Wow. And basically now that we've scaled throughout the years from growing a fund to merging with our other partners and creating, Bloom Capital, we are now actually looking at 300 plus units. We're starting off in Texas. We got some deals in Atlanta. But we only focus on Class B assets, 300 plus units.
Yeah.
Right. And what's it called? And really, what we do is we're vertically integrated. So we look for.
What does that mean exactly? That's a big fancy term everybody uses. But
yeah, sure. So basically, what it is basically we control all the levers. So we're controlling the property management. We own construction. Anything to do, even the asset payments for when it comes to property management, anything revolved around the property we take care of. So originally when we started, if you've done multifamily, those are usually expense items, right?
Yeah.
So let's say you're the sponsor, you have construction, then you have to go contract out a construction company. You got property management, you hire them out. Same thing. Everything is now within the company. We're gonna have our own HR, our own finance side of it, our CFO. So basically, we control all the levers of the business.
Very, very cool.
Yeah.
All right. So, how long ago did you get started in multifamily? How long have you been doing this for, Anthony?
Wow. So I would say I started in 2016.
Okay. Very good. So you're you're 9 years in.
Yes.
And right now you've got a combination of portfolio on your own and portfolio with the merged companies. So how many different properties do you guys currently have as a group? Do you know?
So for my group, my company's 9 doors down. We have about 3 or 4 that we manage on our own. We're general partners. And we've also done fund of funds where we work with a reputable sponsor, and we're probably 10 deals into them where we're LP. So fund of funds. And now with Bloom Capital, the company we just merged, and we actually just launched this year, and we already have our first deal, which is I would say it's a development it's a hybrid. I'm gonna call it a unicorn. It's a development that went south. We came in and picked it up at pennies on the dollar, and now we're doing a takeover and then completing it.
Okay.
So that is our first deal for the years. We just launched Bloom, but overall with all our partners, we have a ton of experience.
So we were talking a little bit offline, Anthony, that one of the things that you become very good at is funds and funds of funds.
Yes.
To finance your real estate deals. So let's just zoom out and let's go back to the days before you had even heard of a fund or what a fund was. And why don't you explain to us, because a lot of people have heard it, but they don't really understand what this is. What is your definition of a real estate fund?
So to me, it's very similar to a syndication where you're raising capital, right? And it could be for multiple properties. It's not specific to just one deal. I mean, there are funds where you can create what's called a SPV, a special purpose vehicle, where that's tied into just one asset.
Okay.
In our scenario, uh, we can um, we can do multiple. We can do a evergreen where it can just be open, and that fund, you can continue to raise capital and distribute it and put it out to different deals. It's evolved. So funds have evolved. It's very similar to like a hedge fund. If you give your money to a hedge fund, you're giving them capital, and they pretty much invest your money.
Okay, so
Yeah.
how do you guys, how many different funds do you guys have right now?
So right now we have one, but
Okay.
it's I would call it's a hybrid. It's fairly new when we got into it. It's called a customizable fund. So
Okay.
basically, our fund will, we raise capital, but we can dish it out to any specific deal. I can have multiple deals in it, so it could be a fund that invests in multifamily, or it can have debt. But you have one parent fund, and then each asset will be like its own separate. So if you were to invest in one of my deals and it's specific to multifamily, you would only get you can go in the fund, but you would be only getting returns for that deal. It won't be the entire portfolio.
Interesting. So
Yeah,
you're able to set up a fund and within that fund have specific projects
correct,
and you can raise capital and people can invest in that specific project through the fund
correct.
and get however the agreement is, whether it's, you know, interest only or whether
Yeah.
it's, only upon refinance or sale of the property or, so you can structure things a little bit differently depending on the deal. Is that my
Exactly.
understanding
So
correct?
with our fund, the reason I liked it is because you get to diversify as an investor. We give you multiple options. Say you like multifamily, okay, we got you for the kind of a long term, 3 to 5 year type of investment. And then let's say, for example, we also do where we work with other sponsors who do a bunch of flips. So we have a little small debt fund that's maybe short term. So
Mhm.
our investors will share it with them. They're already in the fund, right? And then they can come in and then just so that's the great thing about our fund is if you're already invested and you're in, if the minimum is 50,000, for example,
Mhm.
if you're already in for that minimum, you can go into other deals as low as like 10,000 because
So if I were to put 50,000 in the fund, I could say, "Hey Anthony, take 10 grand of that and put it into that flipping debt fund, sub
right,
fund or whatever we call it, that
correct.
that thing. Keep the other 40 in the long-term multifamily part." Hmm. Yeah, that's
Yes, we
interesting.
we
Yeah.
we allow that for exactly. So let's say as your and then the money in the fund, you can as it accumulates your distributions, all that, you can go now move that to the side. And if we have another deal, let's say later in the quarter, you can go ahead and put that in there, or you can just put money. So our investors always just keep continually just put money into the fund,
So they tend to reinvest their
reinvest exactly.
and they bring new capital into the deals as well.
So
Is that what
yes,
I understand?
there's times where they brought new capital. Oh, it's actually it's normal for them to just keep bringing in new capital
Okay, so sounds fantastic. Why doesn't everybody just do this instead of syndications?
because I would say people just don't know about funds. People are just scared of it. I'll be honest. People
Okay.
just are used to syndication, one asset, and you're done. Then you go into the next one. You create another syndication, raise capital for that deal. Then you're done. There are some how do you call that? There are some back end administrative stuff that you have to do for your fund, but I mean it's not any different for any specific syndication as well.
Hmm. Interesting.
Yeah.
Very, very cool. So, what are some of the pros and cons of starting a fund? Is this a lot more paperwork, a lot more complicated, a lot more expensive than setting up a syndication, or not so much? What are your thoughts there? Because you've done both. So, what are the
Yeah,
good side and the not so good side?
I would say as your fund grows, maybe starting out the fund, you're gonna have I would say a lot of the administration. There's a lot of administration that comes along with it. And
Hmm.
same thing with any syndication, it's per deal. You can separate it out. What I don't like about the fund is if you have multiple deals in it and you have K1s that are late, you cannot your K1s will be late for everybody because of the fund. It's because the fund files one tax return.
Ah,
That
okay.
that's that would say that would probably be the biggest uh, disadvantage. What I didn't like is I've had some operators that were really late
Mm,
and it just delayed the entire thing. But I think that overall it's very similar. There's just a mental change when it comes to just fund because you have let's say you're investing in a specific deal with a sponsor, right? And you get those you get specific returns. Now, if you're now with a fund, there's also management fees that comes with it that you can charge. So with a fund, you can actually make money through as a business where you can charge management fees, just like if you put your money into a hedge fund that manages your, let's say, index, like an
yeah,
index
yeah,
fund
or
or anything
mutual
like
funds
that.
or anything like that, right? So yeah,
Right.
yeah,
So in typical syndications, you only I mean you get charged the asset management fees, but it's very similar.
yeah. Very interesting, Anthony. In your experience, what's kind of like the minimum viable amount of capital that you want to be raising in order for a fund to be worthwhile?
Yeah, that's a great question. I think you need to be able to at least raise 1 million.
Hmm.
It's just because of all the fees and administration and some of the expenses involved in running a fund.
Hmm.
You want to make it worth it. So if you can do 1 million plus, I would use the million as your base.
Yeah, no, I understand it's going to be different for everybody
Yeah.
and whatnot, but just big broad strokes, give or take, what's involved financially with setting up your first fund? Like, obviously, you probably got good lawyers and stuff like that that focus on this,
Yeah.
but just to give people an idea, hey, if I were to start a fund, I should be I should be ready, willing, and able to spend this much to get it rolling, and then what's involved with kind of keeping it going fees
Right.
wise over
So
the years, kind of idea.
yeah, I would say about 15 to 20,000 plus. I
Yeah,
would, I mean, there's, trust me, every attorney you talk to, they charge totally different, man.
you could spend a lot more than that, I'm sure, but
Yeah,
yeah,
and I've seen guys in the 50 plus thousand. When we started out, we were probably in around the 10 to 12,000. You know, it's gone up a lot.
yeah,
So that's just the first part of it is the PPM. You know, getting
hmm,
your PPM created, your private placement memorandum regarding the fund. That's all the information about the fund. Second part would be having a platform. You know, like cash flow portal. We use Avestor and other types of platforms
mm,
would have expenses as well because some of them have fees too. It depends on how much assets under management you have or how much capital you raise. Is they get a percentage or sometimes there's a fixed fee. It could be as low as like the first year could be around. Let's say if you had $1 million, you raised $1 million, you're looking around about 5 to 6 thousand a year. Then you have the accounting part of it. You know, that's a few thousand filing taxes. Um, some administration stuff. If you do it yourself, you save money, or you can go hire them out. So it really depends.
yeah. It's easy to see why $1 million minimum
Yeah,
is what's
exactly.
required to make this make sense. Very, very well. Thanks for sharing that, Anthony. That's very, very helpful. Now, what about a fund of funds? What does that mean exactly?
Yeah. So basically, is if you operate a fund, in our case, you can actually go into other sponsors, as an LP. So
Your
usually,
fund can be the LP.
correct. So usually, when you're an LP into a deal where you're not a general partner, you don't have any control. That's what they call it. It's a fund of fund. So we've done that a lot with our one of our really close operators that we trust. Like I mentioned, we have about 10 deals we've done with them. So
Yeah.
our fund will go into their fund. And that's the great thing about a fund. The other benefit is if our operators know we can bring in a certain amount of capital, we get much better preferred returns
Right.
as compared to as a sponsor saying, "Hey, Joe, person A, person B is investing 100,000 here, 100,000 there, 50,000." In our scenario, they know we're coming in with, let's say, 500,000 plus. They give us much better returns and better negotiating power.
Yeah. Very, very cool, Anthony. Yeah, it's making a lot of sense now. I appreciate how you kind of explain this and easy to understand language.
Yeah.
That I always appreciate that. Now, Anthony, when it comes to getting capital into your fund, I got a couple of questions around that. Number one is there like a cap on your fund on the maximum amount of capital that you can raise within that fund? Or is there like a time limit on the fund that it's good for 10 years and then you have to wrap it up and do something else? What are some of the parameters around the fund?
Yeah, so those are some of the SEC kind of guidelines. Speaking with our attorney, it's you want to stay below a certain amount, and you can keep your fund running as long as you stay within. So there's a couple things actually.
Yeah.
If you're running a 506B, if you have 35, let's say you get a you have I think you have a max of 35 unaccredited investors.
Yeah. So
Usually,
friends and family type people, you can
correct.
invest in the fund. Yeah.
If you max that out, it's really difficult. There's really no reason to, you can't keep adding more. Then that means you just have to keep adding accredited investors. So your fund,
But if you're at the 35 and then two or three of them leave, can you replace them with two or three new ones?
yeah, I'm sure you could, yeah,
Yeah.
because
Okay. All right.
we do SEC filings where we do an update on how many investors we have. As long as we're within that threshold, we're good. But we could continue to raise capital, but we need to focus on accredited investors.
Okay.
And when speaking with that, like when you're mentioning the threshold, really, I think what we've been instructed to stay below like under 100 million.
Okay.
You go to a certain category, but
It
overall you
just
can
keeps
just
it
keep your.
simpler if it's
Yes,
100 million or less. Okay.
correct.
Well, that'd be a nice problem to have if
Yeah,
you.
exactly. So I'm like, I'm not gonna say never, but that was my mentality. I was like, oh, that's way over my my train of thought. 100 million.
Well, okay, so that brings me to the next question when it comes to getting the capital into the fund. So
Mhm.
sounds like you started with friends and family. You were able to get like up to 35 non-accredited investors
Mhm.
into the fund. What is your minimum investment that you really are shooting for with investors, accredited or not?
Yeah. So now it's so when we
Mhm.
started, we were probably doing as low as 10,000,
Yeah.
and that was that filled up really quick, and we
Yeah,
didn't want
that
that.
burned up all your non-accredited investor
Yes. So we
spots right away.
started, we went with whoever invested first, and then we
Yeah.
capped it right away to, and then so we're at 50,000
Minimum. Okay.
minimum, and that's because we run a 506B, but 50,000 now that if we're to launch another fund or any syndication, it would be we do 75,000 minimum
Okay,
moving
so
forward.
that
Yes,
lessons learned, right?
yes.
So now you're kind of capped out with the friends and family. You're at the 35. Have you
Hmm.
started bringing on accredited investors into the fund?
Yes, we actually do have
Yeah,
some accredited investors already, and that's the thing about a fund is you got to make sure. Some people don't even know they're accredited until you
yeah,
ask. You know what I
exactly.
mean?
Or till you explain what it
It's
means.
exactly.
Yeah, yeah, yeah.
So
You got
I had to
some
come up. These are
successful
learning
business
lessons.
owner
Yeah,
making 250 grand a year. They've been doing that for the last 3 or 4 years. They might not even know, or they gotta.
they don't. That's the crazy thing is so like when I mentioned when I capped out right away. So I went through and how do you say that? I started sending questionnaires and educating my investors and say, hey, are you accredited? And then I had a set like 10 set of questions. And as soon as they started answering, I got them all back and I went through and readjusted everyone's, I guess,
Oh, so the people
accreditation.
that already invested in the fund, you set the questionnaire and you figured out a lot of those friends or
Yes.
some of those friends and families were actually accredited investors. So that was smart. So that way you could, when you report to the SEC the next year, it turns out that of
Hmm.
the 35, six or seven were actually qualify as accredited. So now you got space to bring in more
Exactly.
non-accredited. Oh, okay, really,
And the
really
great
smart.
thing, the one thing about 506B, I believe there's really no verification. I mean, our verification is just a questionnaire. If you're doing a 506C, you would need to have an accreditation letter.
So for this, if I'm understanding correctly, Anthony, for
Yeah,
this fund, it's a 506B.
correct.
Nickname for that is buddies, right? Some
Yeah.
friends and family kind of thing. And the limitation is you can have up to 35 non-accredited investors in
Correct.
that fund. Beyond that, you can have as many accredited investors as you want until you cap out at 100 million.
Yeah.
But am I understanding that right?
Yes.
Okay,
That's
cool.
correct. And yeah, with 506B, there you don't need an accreditation letter. It
Right.
could just be verbal, or in our case, just to protect ourselves. We have a questionnaire and some forms that they fill out.
Yeah. So they self-verify that they
Self
qualify
verified.
as.
Exactly.
Okay, interesting. Now, what are you finding that works best for you for bringing on new investors, especially accredited investors, into your fund? What? Because you've been doing this for a while, so I'm sure
Yeah.
you've got some
So
experience.
I'm gonna tell you right now, it was big for us because we focused on friends and family.
Yeah,
And finding a lot of accredited high net worth, it's a totally different avatar. The way you approach them, the way you speak with them, like in meetups or whether it's conferences, it's completely different. Now that we've scaled with Bloom Capital, we're actually now only raising capital through funds. So if you're a fund manager, hey, raise capital for our deal. Check out our deal, and we're working with family offices and institutional fund capital now. So I guess to answers, we've changed courses and focus, and through whether it's LinkedIn, we see if you're a fund manager. We work through fund managers now as compared to individuals.
got it. So you are, if I understand correctly, you're kind of looking to turn other people into funds of your funds, other funds into
Exactly.
funds of
Yes.
funds. That's getting a lot of funds in there. But yeah, you're looking for funds to
Yes.
invest in your fund, just like you guys
Correct.
with Nine Doors Down
Yes.
have invested in other deals
Hmm.
using your fund to fund their fund. So you're
Correct.
looking to kind of do that. Okay, cool.
Correct.
But I guess did you guys before this new epiphany, were you proactively looking for accredited investors? And if so, you realize that they're a completely different avatar than friends and family. What did you find to be an effective way of bringing on board new accredited investors, if any?
Yeah. So I think the biggest thing is what we're very, how do you call that? What we thought really worked is building relationships. We do a lot of
Yeah.
networking events.
Mhm.
Um, my business partner, he's in Vegas. I'm in Los Angeles. We do meetups, and we also host our own meetups, and
Smart.
that's really helped too. Is because you can't just meet a new investor and all of a sudden they'll invest with you. So a lot of it is building relationships, um, educating them, letting them know what you do. If there's opportunities in the future, hey, we can talk about that. But really, just getting out there. I think meetups, you can reach out to people on social media, but I don't like, for me, social media really didn't I didn't attract a lot because
Yeah.
that's not what we did.
Yeah.
Really, it's we want them to know our business, our company, and what we do. Just sharing what you do, I think, really helps, and then just follow ups.
Yeah.
I know there's a lot of people who do a bunch of campaigns and this and that, but really getting on a call with individuals is the
There's
best way.
nothing like that personal connection, right? They gotta know you. I mean, you heard it a million times. They gotta
No,
know
like,
you,
trust.
gotta like you, and then they gotta trust you. And that's hard to do across, DMs.
Hey, that doesn't come. Yeah, exactly. It's just, hey, check us out. Hey, let's explore.
Yeah.
That's it. And from there, that's that type of avatar. Now, when you're dealing with like fund managers, I mean, we have a pretty large network of fund managers because we're fund managers, and
Yeah.
we help each other out.
Yeah.
Whether they have a deal that they're trying to raise capital and we can help them out. That's a different type of way of what's it called?
Of raising
Networking
capital. Yeah. Yeah.
and
Of
raising
networking. Yeah.
capital.
Yeah.
And then family offices, you really got to do an intro call. You got to
Oh yeah.
there's layers, right? You got to
Yeah.
get to the decision maker.
Yeah. Yeah.
So
And they're at a different level professionally
profession,
than you
exactly.
might have been accustomed to. Well, this is
So you got to
fascinating
really
stuff.
have your ducks in a row.
Yeah.
You can't go in there not having anything. Like, you don't even have a proper email address. You don't even have a website. The first thing these guys would look at, simple test will be, hey, what is Bloom Capital? If they look it up and they don't know anything about it, and there's nothing out there even on the internet. Like, who are you then? Because
Yeah.
they play with the big boys and large capital. They don't mess around.
No, that makes sense. Anthony, thank you so much for sharing your experience, what you guys are up to with your companies, what you're investing in, and especially explaining the whole fund thing. I think that's much clearer now for everybody. So
Yeah.
if people want to connect with you and find out more about what you're up to, where can they go?
Yeah, just check us out at bloomcapital.com, or you can email me at apimentel@bloomcapital.com. So, yeah, and social media, we're on Instagram. Check us out, Bloom Capital.
There
So,
you go.
yeah,
All right. Anthony, thanks so much for being on the show. It's been a lot of fun.
appreciate you. Thank you.
All right, everybody, take care. We will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.